Dear everyone, you're welcome to this week's Business and Investment Tips program, a production of RCCG Christ Church Radio with Ayodeji Ebo, an investment professional. This week, the focus is on avoiding idle funds in a period of high inflation. Last week, the National Bureau of Statistics, NBS, released the Consumer Price Index CPI report for February 2023. The Consumer Price Index (CPI) is used to calculate inflation as it measures the average change over time in the prices of goods and services consumed by people for day-to-day living. The report revealed that inflation increased to 21.91% year-on-year in February 2023, its highest level since September 2005, from 21.82% year-on-year in January 2022. On a month-on-month basis, however, inflation dropped to 1.7% versus 1.9% in January 2023. This marks the 14th consecutive increase in the inflation rate caused by supply-side pressures and the low base from last year. However, it is worth noting that the slight drop in the monthly inflation rate can be attributed to the cash scarcity due to weak demand. Food inflation, which makes up to 50% of the CPI basket, reached 24.35% year-on-year, up from 24.32% in January. Meanwhile, core inflation, which removes the impact of farm produce and energy, dropped to 18.84% year-on-year from 19.16% year-on-year in January. The relative stability of Naira and the drop in prices were the major contributing factors to the moderation in core inflation. To us, we think inflation will remain elevated for the first half of the year owing to prolonged Naira scarcity, the aftermath of flooding incidences, and along with the intermittent supply of petroleum products. When inflation continues to rise, it becomes essential for investors to seek returns or yields that match or exceed the inflation rate. At the minimum, investors should bridge the inflation gap rather than keeping idle funds and earning zero returns. This is because inflation erodes the purchasing power of money over time. With yields in the fixed income space remaining depressed and at odds with the monetary policy rates, investors should consider investing in high-yielding fixed income investment. These include commercial papers, bank placements, high-yielding savings accounts, and federal government savings bonds to offset the impact of the inflation on your investments. In other words, don't let your funds sit idle in your bank account as they will lose value in real term due to inflation. Suppose you have 100,000 in your bank account in the last year. It is now worth 78,090 Naira in real terms, resulting in a loss of 21,910 Naira in purchasing power. Investing in a high-yielding instrument that offers 12% per annum can reduce the loss in purchasing power by 12,000 Naira. That's quite significant and can make a huge difference in your investment portfolio. It's important to note that Ponzi schemes are prevalent in periods with high inflation and low interest rates. Hence, investors should be wary of investments with interest rates significantly higher than or close to the current inflation rate. Before investing, conduct your due diligence on the investment firm you are investing with and the investment product that is being sold to you. Ensure the firm is regulated, run by people of great integrity, and have existed for a while. All these will minimize your risks. Thank you for listening. Please join us same time next week for another interesting and insightful session. For comments and feedback, kindly forward to ebo.ayodeji@gmail.com or send an SMS to 070-8246-3747. Stay blessed.